Welcome back to the Financial Flux, where we decode the complex world of finance and real estate. Today, we're diving deep into a legislative earthquake shaking up the Dallas-Fort Worth multifamily market, Texas House Bill 21, or HB21. This isn't just a new law, it's a game changer that may force many properties to sell and create massive opportunities. For years, a clever loophole allowed operators to get up to 100% property tax exemption on multifamily projects across Texas, often for luxury apartments and value-add deals, without actually providing much affordable housing. They did this by partnering with what were called Traveling Housing Finance Corporations, or HFCs, from distant counties. These HFCs would own the property, granting the exemption, and developers would pay virtually no property taxes. It was a multi-billion-dollar drain on local tax rolls and, frankly, a raw deal for taxpayers. Now, HB 21, signed into law by Governor Abbott, slams that loophole shut. It mandates local approval for HFC deals, requires at least 50% of units to be genuinely affordable, and demands rent reductions equal to at least half the tax savings. The kicker, these rules apply to existing deals. Specifically, if these properties don't get local approval and meet new geographic criteria, they lose their 100% tax exemption after January 1st, 2027. This is where it gets critical for Dallas. The DFW multifamily market is already adjusting from previous headwinds. We're seeing higher vacancy rates, over 11% for Class B and C properties, and more than half of properties offering concessions such as 6 to 8 weeks free rent. On top of that, a massive commercial real estate debt maturity wall is looming in 2025 and 2026, with hundreds of billions in loans coming due. Refinancing is already tough, with elevated interest rates and tighter lending standards. So imagine a property that was barely staying afloat because it paid zero property taxes. Now suddenly, it's facing a massive tax bill, plus it needs to refinance in a challenging market, and it's dealing with high vacancies and falling rents. For many troubled operators, this combination is a kiss of death. They simply won't be able to service their debt or maintain profitability. This is why we anticipate a potential wave of forced sales in the next 6 to 12 months. Owners will be compelled to sell before that January 2027 deadline or face foreclosure. This creates a unique opportunity for well-capitalized investors to acquire assets at potentially favorable terms, shifting ownership in the DFW market. In the long run, HB 21 aims to bring more transparency and accountability to affordable housing, ensuring tax breaks actually serve their public purpose. While there might be short-term turbulence as these distressed assets hit the market, it's a necessary correction for a healthier, more equitable real estate landscape in Texas. What are your thoughts on HB 21's impact? Are you an investor waiting on the sidelines eyeing these opportunities, or a property owner feeling the squeeze? Let us know in the comments below, and if you found this breakdown valuable, hit that like button, subscribe to the Financial Flux, and ring the notification bell so you don't miss our next deep dive. Thanks for tuning in. We'll see you next time on the Financial Flux.